turn to the labor market here. Obviously, part of the Fed's dual mandates, labor and inflation. This is an anecdote, but I went to my dry cleaner this morning, dropped off my dry cleaning, asked her how business was, and she said, well, I had to let go 7 or 8 people because of COVID. Now I'm trying to hire back, but literally can't find anybody. People are, in her mind, staying home collecting unemployment benefits rather than kind of going back into the workforce. I guess the first question is that something that's really happening? And the second question is, how do you think the labor market plays out sort of over the next couple months, maybe looking at jobless claims and then sort of the next couple quarters?
Yeah, it's definitely happening. And I see it everywhere where I am locally. I see help wanted signs like outside of practically every small business I drive by now. We wrote an early look on this last Friday, and we tried to quantify a couple of the things that are happening. And so you basically got still 15, almost 16 million people collecting unemployment insurance. And to put that in perspective, at the peak of the financial crisis, there were 6.5 million. So even with all the improvement that we've had over the last few quarters, we're still at almost triple the amount of people collecting unemployment insurance as there were at the peak of the financial crisis. And the way that breaks down is that it's roughly a third, meaning a third of the people are on traditional state unemployment programs. Then you've got a third who are on extended benefit programs made possible through federal action. And then you've got a third who are on a separate program called PUA, which is Pandemic Unemployment Assistance. And this is really people who are sort of non-traditional workers, like gig workers, who historically would never have been eligible for unemployment insurance. But because of the CARES Act, this program was created and now they are eligible. And so what's interesting is that there are about 21, now 22 states in the US, mostly predominantly Republican states, that are going to basically decline federal assistance from an unemployment standpoint, really beginning in a couple of weeks. So beginning in mid-June and running through mid-July, you're going to have these 21, 22 states that collectively account, in some big states like Texas and Ohio, that collectively account for about 35% of all workers are going to extricate themselves or remove themselves from the federal assistance program. So that means no more $300 a week supplemental payments, no more PUA assistance, no more extended benefits. And so the effect that's going to have is it's going to push about 3 to 4 million workers back into the labor force over really sort of the June, July, August timeframe. The other big thing that's happening is that you've had anywhere from 2 to 3, some estimates as many as 4 million people leave the workforce due to childcare reasons. And there's some sort of disagreement over the actual numbers here, but it seems pretty clear that the numbers are large, regardless of what the actual numbers are. And that's basically because, think of a scenario where you have a single mom, her opportunity set for employment isn't great when you take into account the cost of childcare with remote learning, distance learning. And so, the schools being closed still in more than half of schools across the country is a big issue here. And the idea is that post Labor Day, when we go back into the fall semester for schools to reopen, the expectation is that most schools across the country are going to reopen. And that's going to enable these 2, 3, 4 million people who are home because of childcare reasons to be able to go back into the workforce. So I think the sort of outlook for July, August, and September employment numbers to be very strong is really good based on those factors.